My name is Nick B, and let's get into this week's futures overview, starting with the Forex economic calendar. It seems like it'll be a quiet week. Um, Monday, no news. Tuesday, you have the BRICS Summit, FOMC, Harker speaks. Not much really, not really red label news. Wednesday, crude oil inventories at 10:30 a.m., existing home sales at 10 a.m. Not really red label. Thursday, unemployment claims and flash manufacturing PMI, which takes place 8:30 a.m. and at 9:45 a.m. And then new home sales at 10. Friday, core durable goods. So it's not really going to be too crazy. I'm wondering if Monday and Tuesday is going to be the runner up to what we see into Thursday. Thursday is going to be probably that main catalyst for unemployment claims and flash manufacturing PMI. Most of the most of the news that's been coming out is great, and the problem that we're seeing, why we're kind of not going up or down, we're kind of just trending sideways. What I understand is all the good news is strengthening the dollar, but we need a weaker dollar, and that's why we're kind of having this slowdown. But all right, it's still bullish. Let's jump into ES. We'll take a look at the dollar. That's something I'm keeping an eye on. Yields, that's important. And the VIX finally filled its gap last week to the downside. But let's take a look at what we have going on here. Okay. Oops. All right, so we made new all-time highs, 59.27. Wow, above 5,900. I mean, wow. Beautiful, just absolutely beautiful. Higher highs, higher low, higher high, higher low. We made a new higher high, and if there was to be a higher low, it'd probably be closer to 58.10. But again, on the daily, from what I understand, as long as we keep breaking these highs, 59.27, you got 59.30, 59.40, 59.50 will serve as the middle line. If we can get above 59.50, we will see 6,000 into November. Now, the baseline here that we held up for a few days last week was 58.50. And our 20-day EMA is at 58.10. Man, this is so bullish. I got to break this down to the 4-hour because there's really not much I can tell here. All I understand is the floor of the higher highs and the higher lows that we made. The 4-hour helps me get a better idea of what that is. Those are the all-time highs, and then I'm going to have to plot this base right here at 58.50. Um, Looking at this on the 4-hour, I understand that psychologically 5,900 is that support. If at any point ES decides to kind of dip below 5,900, we're going to be exposed to the intraday's higher lows that we've been climbing higher and higher. Below 5,900, I'd look at 58.75. Below 58.75, you have 58.70. Below 58.70, you're coming down to the area of 58.50. 58.50 is going to be the threshold to the downside. If at any point this week we end up below 58.50, that's, I think, going to indefinitely expose us down to the higher lows of 58.10. That would be a perfect retest of the breakouts that we've had the last week or so, down to 58.10 of the higher lows here that we broke out of. Let's see. Let's see, 58.50. Yeah, that's about it for downside. I can't really go too much into too much detail there. And then upside 59.27. Again, really my first target would be 59.40. 59.50 again is that middle ground. Anything above that, that's going to open us up to seeing 59.60, 59.80, and then 6,000. Again, let me see on the intraday. I got to really break this thing down because we're really in between a floor and it's kind of showing us that it's been a melt up. So long as the daily, the 4-hour, and the 1-hour time frames support price above the 20-day EMA, it seems like we could just keep buying off of them. So on the 1-hour, our 20-day EMA is 5,900. That's the threshold. So I'd say as long as 5,900 holds, and if we get another crack intraday above 59.15, I would feel more comfortable at 59.20. You could take that stab. The only problem is the risk to reward would be off. Your risk would be at 5,900 minimum because as long as price stays above 5,900, it's bullish short term. And then you would be betting on momentum going for 7 points above your entry. So you're risking 20 points to make what? To 40, let me see. It's not worth it. It's a 1-to-1 basically. So ideally, if anything, you can wait for the confirmation of 59.27. I'd feel comfortable setting my stop to 59.19, slightly below 59.20, and then indefinitely above 59.27 and a quarter. My target would be 59.40. That would be a little bit tighter risk to reward and more worth our while on the grind up. That's one way. To the downside below 5,900, I'm really not for the idea of shorting. Even the rips up here, even in between this range here, I much rather, as price is grinding out through here, I much rather wait for us to get the confirmations that we need and then execute. All this timing stuff, it puts us in a tough predicament because our risk to reward ratio has to be either negative or slightly off, and then ideally, we're putting so much risk on the table or risking a 1-to-1 setup for what? 20 points on momentum, 30. Well, on ES, no. I'm thinking about NQ, but on ES, maybe 5-10 points. Even though intraday ES likes to move 20, just not worth it. Just not worth it. If I'm looking at this here, this area in between, mm, not ideal. Waiting for the breakout. All right, let's move on to NQ. Got hung up there on ES. All right, so same thing with NQ pretty much. Higher highs daily. We're holding above the 20-day EMA, which is at 20,200. Had a wonderful pullback last week and bounced right off of that level, making new session highs at 20,686. Then we came down to retest it. And again, we're in the middle ground. So we know this is bullish. The baseline is if at any point the daily candle closes below 20,200, that's going to expose us back down towards 19,900, 19,800, roughly in the areas of the previous higher lows. Below that, we'll be revisiting the next floor of 19.5. I don't see that quite possible, but I won't exclude it as a scenario. My focus is going to be as long as we hold above the 20-day, it's bullish. Buy the dip, buy the breakouts. So let's look at the floor that we're in between because the higher high that we just broke out of was 20,530 and the higher low that we solidified was 19,800. We had a really nice retest, so let's narrow down the floor we're between, and that's going to be the new session highs of 20,680 and the floor of 20,200. So a break of 20,680, eyes closed, you got to put a little bit of a wide risk because your first target psychologically is 20,700. But if price can clear 20,700, you have all this room to come up to 20,750, and 800 is really that main target if we can hold 20,700 breakout. Above 20,800, you're coming up to the all-time highs of 2983, above 20,983, 21,000, and ideally above 21,000. You guys know I like to target the intraday moves of 200 to 250 points on NQ on a breakout. So ideally above 21K, I'm looking at 21,250 as that first upside target. Now, if we do again break below 20,200, okay, let's see how much downside it's going to give us. Maybe it comes down to 19.8 and we bounce off of it. Maybe we come down lower. But in order for that to unfold, I gotta see some kind of catalyst. And I'm just not seeing it. From everything that we're understanding and having come in, it's more of a melt up rather than just, ripping through resistance points to the upside. But that's coming. That's coming. The November seasonality is almost here. To break this down on the 4 hour, again, intraday, this action sucks. Absolutely sucks. You got to go in for momentum. You got to look at the round psychological numbers and you got to go in for 20, 30, 40 points. Or if you're risky enough, you buy it right off of the bottom end of the range and you sell it right at the top end of the range. But What I understand, and again, I'm also not big on patterns, but to the naked eye, I can't kind of deny this. It looks like a cup and handle, possibly on the 4 hour NQ. Or some might argue that this is an inverse head and shoulders. This would be your left shoulder, this would be your head, your right shoulder. I'm looking at it more of a cup and handle because overall, the scenario of the chart is bullish. Again, technical analysis is subjective, but on the intraday, what would be an interesting take is if we can get above 20,600, that's going to be a nice little long towards at the minimum 20,650. So you'd be targeting on the intraday 50 points or at least 80. The problem I have with that is where am I going to put my stop loss? And that's when, traders can fall into the timing of the ranges, and I much rather not do it. I do see that on the 4 hour and the 1 hour, the last week or two, we've been respecting the exponential moving averages pretty well, pretty well. Every time NQ comes down to the 20-day and we can hold it, and you get the candle close above it. Most times it's better on the 1 hour, but especially if the 4 hour candle closes above that 20-day, most times, especially through last week, it bounced unless you had the candles break down. So in this case, we just bounced off of the 50-day last week. We made technically a higher high and a higher low above these lower highs. And again, for us to proceed, we now have to intraday get out of this floor here. So below 20,000, 317, 310, you have a better idea of us seeing 20,000 270. Below 20,000 270, you're coming down most likely to 240 to 200 as that baseline. And if 200 fails to break on the 1 hour, the 4 hour, you can get an idea that maybe price action might turn around here. And then for upside, 20,600 is that barrier. If price can clear 20,600, you pretty much have a green light on price continuing towards 20,680. The problem, though, in between this range here, again, is the risk to reward. If you go for it, it's got to be a 1-to-1, or maybe got to risk it a little bit for the biscuit. So that's on you. I'll be waiting for 680. And either 20,200, unless there's something clearer in between. And again, I could break this down now to the 1 hour. What does the 1 hour tell me? The 1 hour tells me a whole lot of nothing. We just made those session highs, especially on Friday's action where we came up off of the lows of 20,200, made new session highs only to end up nowhere in the same place we were for the last few days. So with that said, again, that's more of a reason for waiting for the confirmations on my part. Get me above 20,680. I am most definitely long to 700, 750, 800, all the way to the all time highs. And if you get me below 20,200, cool, I'll short it too. My first target's probably going to be 20,001, and then 20,000 is a fair first support to come down to. We'll see. No pressure. Something I could do just because we have it up here. Let me try if it even tells me anything. Okay. All right. So we bounced off of 23.6, 38.2. Got to the 50%, and we're slightly below the 61.8 on the 1 hour. None of the 1 hour candles managed to close above 61.8% retracement, which is exactly 20,500. Okay, so this gives me an idea that psychologically, if we can get above 20,500, we can try to go for these intraday wicks of 20,530, maybe 20,530 if we can get another break of this, a 30-point stop, and you're targeting 80 points. So mm, you're risking 30 points to make 50. Nah, it's still not worth the risk to reward unless every 10 points, every 20 points that price goes in profit, you move that stop loss behind it. But this fib also helps confirm that really 20,600 clears the way for us as the wick out, where we wicked and tanked. So really nice. I like the setup here of 20,600, and earlier I was questioning where would I put my stop loss. Well, if 20,580 is that kind of barrier to the upside, maybe I put it slightly below 20,580. So we would be risking, let's see, 30, maybe 40 points for a potential what? 80? That's a 2 to 1 right here, right in between here. That might be worth our while. But other than that, that is all she wrote. Let's see, the dollar 103.46. Ideally, please, please, please get us back down to 102 or below 102. A weaker dollar is something that equities need for a push to the upside. And again, from last week's push, to be fair, on the higher time frames, we are slowly reversing. Okay, so that's a good sign. On the daily, where are we? Okay, okay, this is not a good sign. Ideally, we need to get the dollar to cross over at the minimum below 102.76. I remember. That's a fair start, but we'll see what we get. Same thing. Keep an eye on the VIX. VIX is now trending lower, 1803. Let's see what we get into Monday's open. How this week treats us. It might be slow. It might be a nothing burger again because most of the volatility might be building up into next week and the elections for November 5th. Once that is out of the way, we will have a clear runway. With that said, have a solid trading week ahead and catch you on the next one. Cheers.